Good morning. Welcome to another QB Power Hour. Today's topic is 6 common inventory mistakes in QuickBooks, and I'm very glad to have you joining us today. My name is Michelle Long. I'm a CPA with an MBA in entrepreneurship, the owner of Long for Success, the author of several different books, and I wanted to point out one thing. If you'll notice the book cover there, we do have a new updated QBO practice set. So if you want more practice learning how to use QuickBooks, entering transactions, and running reports to double check yourself, reconciling at the end of the month, you might want to check out that QuickBooks practice set. There's one for QuickBooks Online, and it's just been updated recently. There's also a desktop one. Those are out on Amazon, and thank you to my son for getting this done. So check that out if you'd like to. Also, I want to remind you about joining us on the Facebook group. It's QB Power Users. We'd love to have you join us out there on the Facebook group. Dan, do you want to introduce yourself?
Yes, good morning for me, because I'm on the East Coast, or the Pacific time zone, but anybody on the East Coast, got you on the afternoon. My name is Dan DeLong. I'm a former displaced Intuit support engineer, and right now owner of Danwith, transforming accounting practices through technology. And I am just recently finished being a technical editor for the QBO for Dummies 5th edition, and it is set to be on the shelves, virtual shelves, in the next few months.
Awesome. Thank you, Dan. Very thrilled to have you joining us as part of QB Power Hour. Dan is a QuickBooks guru expert, and he's pretty funny. You got lots of one-liners and stuff. I think it's great to keep us laughing. So, all right. So a quick update on the QB Power Hour. Some of you that may not have been joining us throughout the busy season and everything, Hector and I did make some changes when it comes to QB Power Hour. I am going to continue doing QB Power Hour. We do not offer CPE right now. I'm not sure if we'll do that in the future or not, but there is no CPE for today. Hector and I are going to be sharing the Facebook group. You'll notice the name change from QB Power Hour in the Facebook group to QB Power Community. Hector and I couldn't bear to let either one of us, lose that community connection that we have with you all, so we're going to share that group. We'd love to have you join us out there. There's been some very spirited and lively discussions. I think that's a nice way to put it, right?
Yes, very much
about
so.
some of the things that Intuit has been doing lately as far as price increases and some of the changes that they have and have been testing with the QuickBooks Live. And I do plan on addressing those two issues either in a blog post or a webinar upcoming, so stay tuned for that. I have been quiet, especially on the QuickBooks Live issue, because my son, who is also a CPA, is one of the bookkeepers that Intuit hired for QuickBooks Live for the testing program. Now, he just fell into it. They found his resume on one of the websites, and I had no idea QuickBooks Live was even going at that time. So it's a story, and I've got some insights and some thoughts of mine about the whole situation to help address some of the thoughts and concerns that you all are expressing. So pay attention to my blog, longforsuccess.com/blog. I'll have a blog post and or a webinar. I'm hoping to do some kind of webinar where we can do some Q&A and people can have the opportunities to talk and share some of this as well. So stay tuned on that. But with the QB Power Hours, the topics that we're going to cover, we're not just going to be covering QuickBooks Desktop anymore. QuickBooks anymore. We'll still talk about QuickBooks Desktop and Online, but we're also going to be including more topics on marketing and social media, on pricing and value pricing, as well as third-party apps and appifying the processes and things like that. So we're going to do more than just QuickBooks, and we're going to have topics that are going to help you as an accounting professional succeed in your business. Now, all of the PDF of the slides for the whole year are going to be in this tiny.cc URL. You can see the QB Power Hour handouts, and I think capitalization is important, so you'll pay attention to the QBPH and H are all caps versus the rest of it lowercase. And then the recordings, I apologize. I thought I had uploaded the last 2 recordings, and evidently something timed out and they did not get up there. So this afternoon, that's on my to-do list, is to get all of these recordings uploaded to my YouTube channel so that those will be available out there. So if you missed a previous webinar, you can go get the handouts from that URL, and you can go out then to the recordings to find it there and share those. I'd love to have you share those as well. Okay, a couple of upcoming events real quickly, and then we'll get into our content. As you know, QB Power Hour is roughly every other Thursday at noon Eastern Time. Our next one will be May 16th. Hector is now doing the advanced webinars on the third Thursday of each month. The next one will also be on the 16th. The good news is, as soon as we get done here with QB Power Hour, Hector's will start on the advanced webinar. And today we're talking about some common mistakes with inventory. On the next advanced webinar, Hector's going to be doing a deep dive into inventory. So this is kind of a great lead into that one. Also, I wanted to make sure you all were aware of the QuickBooks VCon as well as the Roadshow. The QuickBooks VCon, we've got another one coming up May 22nd, 23rd, and then there's also one going to be in June. Every month now through the end of the year, Intuit will be doing a QuickBooks VCon. Also, the Roadshow is kicking up. The tour is going to be starting in mid-May. I personally won't be starting till June because I had foot surgery and I'm still not going to be walking really good for a while. So, but it starts around mid-May, and there will be live certification and or recertification training in various cities across the U.S. So you go to that qbtrainingevents.com where you can look and register for those. The VCon and the live training events are free, so you'll want to check those out, and we'd love to have you attend at a city near you. And then Scaling New Heights, Dan and I both will be there in June in Salt Lake City, and we'd love to have you there. It's a wonderful conference with a lot of great content, so we'd love to see you there. So quick overview.
Are you presenting anything at Scaling New Heights, or just attending?
I am. I have 3 separate sessions, one on videos with social media, and I apologize, I can't remember the others. I'll post it out on the Facebook group, though. Thanks, Dan. But yeah, Dan and I would love to see you all there, meet some of you, and hang out and stuff like that. So specifically what we're covering today is we're going to talk about, first of all, Dan's going to talk about a quick overview of inventory and what's available in the different versions of QuickBooks Desktop and Online. Then we're going to get into the 6 common inventory mistakes. Tracking inventory. Yes, that can actually be a mistake for some clients. Setting up inventory for materials and supplies. We'll talk about recording purchases incorrectly. Negative inventory. We know that's a big no-no. Inventory returns and exchanges on a cash basis. Dan's going to cover. And not adjusting or writing off inventory correctly. So hopefully this is going to help some of you all with some of your clients. So let me launch a quick poll question there on how well do your clients track inventory now? Do they do a good job or a bad job? So let us see that. Somebody says, are you providing a link for the handouts? The handouts are available at that URL that I had on the previous slide, so you will have that. And then somebody says they're asking about the practice set. Is it used in conjunction with the practice company in QuickBooks Online Accountant? No, Brenda, it doesn't use Craig's Design and Landscaping. Our QBO practice set has you go sign up for a free trial. You get a 30-day free trial at QuickBooks.com, and you create a new company called Fitness Haven. It's a couple of partners that have started a fitness business. So it includes services and classes and some recurring invoices, I believe. It includes a little bit of inventory with some power drinks and energy bars and things like that. It does not include inventory, but you start a new company for that.
And you don't want to do that in your accountant version because you only get a 1-day trial.
Right. That's why. Yeah. Good point. That's why you want to go to that
trial.
Thank you. Yeah, the free trial at QuickBooks.com.
I threw you off there. You forgot I was here.
Well, people were wanting the slide, so I was going back to that slide. I can't multitask sometimes. All right, last call on this poll question, and remember, these are for informational purposes only. So I'm going to close and share that because I think it's interesting. 26% of you say they do okay with inventory. 37% say not good. 13% are terrible. So that's like 50% of you that have clients that make mistakes with inventory. And so you hopefully will benefit from this today, and we can help our clients avoid some of those mistakes that they've been making. Because part of it is making them aware, don't do this. You know, what's the right way to do things? So people were asking for the handouts. Here it is again, tiny.cc QB Power Hour, QBPH, handouts with an S at the end, 2019. And I will try to copy or paste that in there or something when Dan's talking. I will try to get that in there.
The PDF of the handouts isn't in there. I think that's what the issue is.
And so I will work on that.
Upload that.
I will work on that while Dan's talking. I'll put it in the GoToWebinar toolbar for right now. So Dan, do you want to go ahead and talk about the inventory details in QuickBooks Desktop and stuff?
Absolutely. So we're going to start off with the desktop functionality. It looks like yeah, there we go. And so the different flavors of QuickBooks Desktop are going to have a variety of feature sets with regards to just inventory, what we're just talking about. So I kind of broke it out into kind of a saying. So Pro is I buy stuff, I sell stuff, and I want to track stuff. So it's it's a simple inventory process. It allows you to track the on-hand quantities of your inventory parts. And that is about it. You don't manipulate those quantities, or you don't manipulate the merchandise before you actually sell it. So Premier is going to be the I buy stuff, I build stuff, and buy stuff in bulk. So there's a lot of stuff going on, but the major features that are added in Premier is the ability for inventory assemblies, which are going to allow you to build raw materials. So when you have some, like a computer store that would buy those computer components, they're going to take those components, put them into a custom-built computer, and then they're going to put that custom-built computer on the shelf or sell it, individually, or a one-off, type of situation. So the nice part about the assemblies is that you can take those raw materials, and through the functionality of building, you can then combine that and combine the costs and track that from the raw materials to the assembly item. And you can also add non-inventory things like labor and other non-inventory parts as part of the inventory assembly. The other feature that's added in Premier is the units of measure. And the unit of measure is really just defining what a quantity is on a sales transaction. So with Premier, all versions of Premier, you have the ability for a single unit of measure, and that's just defining what one is. Is it an each? Is it a case? Is it a six-pack? If it's I'm getting into beverages here, so it must be happy hour soon. And with contractor, manufacturing and wholesale, and accountant edition, you have a multiple unit of measure. And that works well, again, with beverages, where you buy stuff in bulk, but you sell it individually. So if you're a convenience store, you buy the case, and then you break that and turn it into just individual things that you put on the shelf. So that multiple unit of measure allows you to track that much easily and do the calculations. Enterprise is where we do a lot of stuff with my stuff. So the advanced inventory functionality in Enterprise, which is only in the Platinum Edition, so they have to be on the Platinum Edition of that subscription of Enterprise, will allow for FIFO, first in, first out, multiple locations. So they have a warehouse and multiple locations for where their inventory is physically located, so they can see, oh, it's at this store as opposed to this other location. Bins and lots, which will allow them to physically know where something is, and that's great for like recalls and things of that nature, where there's E. coli or something, some kind of something where something's got to be recalled back. They'll know where that specific inventory is located, so they can pull that out and not sell it. And then it'll also allow for barcoding and using a barcode scanner to be able to add inventory on sales transactions that much easier. And with that, there's the warehouse management app as well as the inventory scan, mobile inventory scanner, so they don't necessarily have to be in QuickBooks to do some things with their inventory as well. So on the next slide, we're going to talk about the inventory preferences. So this is just a screenshot of Enterprise, so if you're using Pro or Premier, it may not have all of these features, but inventory is not turned on by default. So that's typically where things get held up initially, is I don't even see the ability to create an inventory part. Well, it's not turned on by default. So that checkbox of inventory and purchase orders are active. This needs to be turned on, and that will turn on all of the inventory features. Available quantity is how much are you able to sell. And you have some functionality here or preferences that you can choose to specify what available quantity will be calculated as. And available quantity is, what is available to sell as opposed to the quantity on hand of what you have in your store. So if you want to have the available quantity be deducted by a sales order, because sales orders, as you know, are not posting transactions, but if you create a sales order for somebody, you typically wouldn't want to sell that out from underneath somebody by not realizing that it wasn't available to sell. And so that will help with your physical workflows of, okay, I didn't pull it off the shelf, or I didn't put it behind a counter, or whatever they physically didn't do with that merchandise, that this will then alert them what is available to sell or not. And then you have negative inventory warnings, what you want to do about negative inventory. And as we get to the slide about what the ramifications of negative inventory will allow you to specify or advise your client what is the best option here. There's enhanced inventory receiving. Really all that does is it changes what happens with item receipts. When you receive something in that's on an item receipt that you haven't been billed for yet, when you choose the advanced inventory receiving, then it will go to another liability account, not accounts payable. By default, an item receipt will post to accounts payable. Maybe you don't want to actually do that, so enhanced inventory receiving will allow that to go to another liability account and not accounts payable. And then auto cost and price. This will allow you to automatically adjust price when costs change. And so that's a good feature to have, or could potentially be a good feature to have, and just a preference to what you want to do with that. So on the next slide, we're going to talk about the inventory go ahead.
Dan, one of the things I'd like to add about desktop is, because you just covered how robust, especially the advanced inventory and enterprise is, it's very robust and everything. There's also in the client data review tools that are out there that we have available as accountants, there is a Troubleshoot Inventory tool that will help you to identify, was there ever any negative inventory during the year? What inventory items were never purchased in this year or last year? Or what inventory items were never sold? So that you can go in and identify some inventory problems and things like that. So there's a Troubleshoot Inventory tool. It's under the Client Data Review tools in Desktop that's really cool. So I just wanted to point that out as well. Sorry, go ahead.
Yeah, thanks. That's a great add. And that feature really is a good way to take a lot of the load off.
I'm really biased because I was involved with the accountant posse. We told the engineers what we wanted the tool to do, and so I helped create that tool. So I always like to mention it when I get a chance. That and the reclassifying transactions, those are some of my babies. Go ahead.
Something that's close to your heart.
Yeah.
All right, so when it comes to inventory in QBO, it's available in Online Plus and Advanced. Big difference between QuickBooks Online and Desktop is that QBO is only FIFO based when it comes to the cost calculation. So sometimes when you bring a desktop file up to QuickBooks Online, you're going to be transitioning to FIFO. So that's something to consider. Especially when you're dealing with taxes, how they're calculating their costs and things of that nature. Like QB Pro, it's basic inventory, no assemblies, no multiple units of measure, barcode scanning, things of that nature. So on par, it's similar to QuickBooks Pro. So kind of think of it that way. But if you need it, if you have a client in QBO and they want to stay in QBO, but they need a little bit more robust inventory tracking, there are several third-party apps that can be added on for inventory tracking, like SOS Inventory, and the other one just kind of flew out of my mind there. But there's a lot of different apps. I think it's about
Webgility helps with e-commerce and stuff, and yeah, there's a bunch of them out there for QuickBooks Online. So great, Dan. Thank you. One thing I might just point out too, Dan talked about how for the most part in desktop it's average cost unless you're using the advanced where you choose FIFO. So if you're converting from desktop to online, remember you're making a change probably from average cost to FIFO on the cost basis, and so you need to be aware of that, and that details and stuff is covered more in the advanced certification training. So if you haven't checked out those resources and the training materials, I encourage you to go check them out. Even if you're not ready to work on the advanced exam, go check out those training materials because it covers that more for you. Very good. Thank you, Dan. All right, let's get in now to some of the mistakes that our clients make when they're working with inventory. First mistake is tracking inventory. And yes, that can be a mistake for some clients. So this is where sometimes we have to protect the clients from themselves. So I wanted to make sure, first of all, that you all understood the difference between perpetual inventory and periodic inventory. When we're talking about tracking inventory in QuickBooks, we're talking about perpetual inventory. They record everything they purchased, how many, they bought 5 widgets, they sold 3 widgets, everything. You're tracking every purchase and sale of inventory. You've got a perpetual system, so it should be always up to date and accurate, theoretically, right? Not. Then we have the alternative, which is periodic inventory. With periodic inventory, as they purchase inventory, they post it directly to cost of goods sold or a purchases account, and then periodically they take a physical count of the inventory and they adjust to actual. At least annually, the IRS says they have to do a physical count. So periodic inventory is something that some of our clients should be doing. All right, so when do we advise our client you should not track perpetual inventory? Well, if it's a small client, if the volume and the size of the client is small, they don't have a huge volume of inventory, the dollar amounts aren't huge, they don't have somebody dedicated and capable of tracking the inventory purchases and sales accurately, if they're not committed and have the staff and the wherewithal to record every purchase and every sale, the details of those inventory, it's going to quickly get messed up. And some of you, like me, and Dan, some of us who have seen inventory mistakes and messes, you know how bad it can really be. It can be so bad, there's really no good choice except to get a physical count, adjust to actual, and start over because they've messed it up so bad. Because it would cost way too much time and energy and money to go back to fix it all. So clients can make a huge mistake. So sometimes we need to tell them, no, you should not be tracking physical inventory yet. And it may be in another year or two, they've grown in size, now they can hire someone and they're more committed and they're more capable and they have a bigger need for it. So they may want to start doing that. The other thing is a specialized inventory. Let's say you've got Greta and she's going to do gift baskets and she's going to order 10 coffee mugs and 15 things of candy and 20 of this and that, and she's going to assemble a gift basket. Oh, I want to track all the inventory and I want to build the assembly of these gift baskets. Well, maybe her total sales are $25,000 a year or $50,000, and it just may not really be feasible to do that. She may not be ready to do that. If it's a specialized inventory, let's say it's somebody opened a cupcake store and they want to track the cupcakes and they want to know their cost and all that. That is very great idea that you know your costs and all that. However, when you're dealing with things like a recipe and weights and measures and all that, you really need a specialized third-party app for that. And unless they've grown and they're a little bit bigger, they may not be ready for that yet. So sometimes we have to advise the client, you're not ready and you're not in a position to track perpetual inventory at this point. We're going to do a periodic system, and then later you may change the client to a perpetual inventory system. So just keep that in mind. Sometimes we have to tell the client, no, you don't want to track inventory, okay? Now, the rest of the mistakes and what we're going to be talking about tracking inventory and mistakes that people made, we're talking about where they're dealing with perpetual inventory, where they should be recording every purchase and every sale properly. So keep that in mind. So the second mistake is you have clients that will want to set up inventory for actually like materials and supplies because they want to know the cost for every job, right? So I actually had a client that was a contractor, and he wanted to track everything as inventory because he wanted to get his job costs right. He even wanted to track duct tape that was used on the jobs. I was like, oh my God, you're kidding me. Are you serious? Oh yeah, I want to know the costs, and if I set it up as inventory, we'll track it. I'll know my costs, and we'll know how much is being used on each of the jobs and blah, blah. I said, no, you know what? Do you really expect your crew, you know, the guys on the crew or the women on the crew, do you expect them to record? We took 10 rolls of duct tape out to the job. We returned 3.25 rolls of duct tape on the job. No, you know, they're not going to do that. And so I had to have a discussion with him about, first of all, inventory is relieved or reduced when they put it on an invoice or a sales receipt. He doesn't invoice or put it on a sales receipt to a client for duct tape or drywall or paint or nails or any of those things. You know, they may just bill for the completed project. You know, they are not necessarily billing and invoicing for each of these individual items. If you don't put an inventory item on the sales form, the invoice or the sales receipt, it doesn't come back out of inventory. So you buy, let's say, for example, duct tape or drywall, you buy it and you put it into inventory, but then it never comes back out. So we have to help the client realize, you know, what is inventory and focus on materiality and, you know, the high dollar items and some things like that, and focus on what is going on the invoice or the sales receipt. Because you can get job costing without setting it up as inventory, but you still wouldn't want to try to track the costs of duct tape because it's not material, right? So we have to help the client understand some of those things on what really is inventory. And I see it a lot with contractors where they think, well, you know, oh, I got a lot of inventory. That would be like us if we go to the wholesale club and let's say we buy a case of copy paper. Right? We're not tracking that as inventory. That's materials and supplies. And a lot of our contractors, our plumbers, our electrician, they may have things like that that they kind of want to track, but you shouldn't be tracking it as inventory for the most part. Remember the rule, does it go on an invoice or a sales receipt or not? If not, you probably don't want to set it up and track it as inventory. Then also...
Yeah, on the flip side of that, you know, you're going to have companies that do a lot of manufacturing. You know, if their raw materials are something that leaves waste, you know, like if it's fabric or leather or something like that, that's the flip side of things where you need to kind of track the waste of products. So that's the other end of the spectrum.
Yes, that's a good ad there. Yes, very good ad. And when the clients get larger and they are doing manufacturing and things like that, that's where you should have, you know, like advanced inventory or a third-party app with QBO. So that's something to keep about. And somebody else said also when they have a separate point of sale system, and that's a good point. If they're using a separate point of sale system like Webgility for shopping carts or any of these other third-party apps that they might be using, the inventory details will be in that third-party app. It won't be in QuickBooks. So when you set up, let's say, QuickBooks Online, you may say, no, we're not tracking inventory because inventory is being tracked in that third-party system, point of sale system or an e-commerce shopping site or other things like that. So that's something to be aware of as well. So when they are purchasing inventory, so they record the purchase on one of the purchase forms, a check, a bill, or an expense. What you want to make sure is that they do not post it to an account. You know, I've seen people who they enter the bill and they put inventory as an account, and they may put 5 in the quantity or whatever, but you can't do that. You have to post it to the item on the items tab. If they post it directly to an account, and the account, instead of inventory, they may post directly to cost of goods sold or purchases. They should not do that when they're doing perpetual inventory. What happens if they do that? Your inventory detail won't match the general ledger balance. All right, if they go directly to the account instead of using an item, they must use the items tab to record that specific inventory item. And I want to show you this real quick, just because if you're using QuickBooks Online, when you go under the account and settings, under the expenses tab, you need to make sure, see right up here on the very top where it says bills and expenses, show the items table on an expense in a purchase form. You have to make sure that you have that box checked so that when they come in to enter a purchase of inventory, they have the two choices. My internet's going to be slow here today. So if they're entering a bill, a check, or an expense, they have two choices, the category or the account, which they are not supposed to use. They have to enter the item details. All right, so they pick the inventory item and they enter the quantity and all the details down there. So that's one of the mistakes that we want to make sure that they record those purchases correctly. All right, Dan, go ahead.
Yeah, I wanted to add about that is the way that I explained it to folks was that, you know, especially when they put it right to cost of goods sold, is that just kind of thinking about it as cost of goods when it's sold, not cost of goods to be sold. And that was a good distinction. And then I had a lot of aha moments when talking to folks about, you know, posting it directly to cost of goods sold on an expense transaction. I'm like, oh, and that's why I use the item. Oh, okay, yes. Yeah,
very good. That's a great tip. And now James has a good point here, and Dan, I'll just let you answer this. So James has a client who was a pool cleaning and maintenance company that also sells products out of the store locations. So they have inventory, and this is true like in this situation with the pool cleaning, or maybe it's a hair salon, where they have products in inventory and they may pull those products out of inventory to use as materials and supplies. So Dan, how would you advise them on doing that?
Yeah, so there's a couple ways that they could do that. A lot of times, you know, you can do a zero sales receipt, so there's no income, but it will track the cost, and then you would just put it to a customer of like, you know, whatever you want to call it, you know, work, you know, or something like that. Or you would have to go and do a quantity adjustment and then offset that to whatever expense account that you wanted to at that time. So there are two ways to handle that. So you can either do a quantity adjustment, either in QuickBooks Online or Desktop, or do a $0 sales transaction to account for it that way. But it does need to leave inventory in order for the cost to be recognized.
Very good. Okay, and we got a couple of other questions in there, but I'm going to let us get through some of this content a little bit more, but we do have time for Q&A, so there's a couple of people that have been typing some in here, so we'll get to those in a little bit, but Dan, do you want to go ahead and cover negative inventory?
Absolutely. So, you know, in the grand scheme of things, negative inventory isn't as bad as one might think, but it does. I mean, in the reality of things, it's not possible, right? You know, so how can you sell something that you don't have? But sometimes it just happens. So sometimes they'll enter in the sale before they enter in the purchase transaction, or you know, things of that nature where it's just an out of sequence workflow, and they end up with a negative quantity on hand. So potentially you could have no cost. You know, that's not good English. Potentially no cost will be allocated on the invoice. So if you set up an inventory item and you know, even if you put a cost on it, but you don't put a transaction that receives it in inventory, that cost won't be allocated on the invoice, and now, you know, inventory asset and cost of goods sold are now incorrect. So that's a big challenge to overcome. But go ahead.
Well, I was just going to say, and I would just add to that, a way that you can look for this problem is if you run the detail P&L for like cost of goods sold, you go look in there and you'll see transactions that have zero. You know, you'll
Yeah.
see all the sales and invoices that have posted to cost of goods sold. If you see things in there with zero, you need to drill down to look because something happened that there's no cost and it could be negative inventory. Go ahead, Dan, sorry.
Right. So the good news is that when, sufficient quantity is purchased, QuickBooks will then go back and recalculate and will automatically adjust the cost. So it's very date sensitive, especially if you're using a FIFO, type of calculation to have that date entered in on in a proper manner. But when you are in a negative inventory type of situation, the data corruption, especially in desktop, can certainly be a huge impact. So if you're in a negative inventory in any point in time, and you do something that's very data intensive, like a condense or a rebuild of your data file, if you suspect that there's corruption, that's like a big pothole to QuickBooks. And just like when you hit a pothole in your car, you're not quite sure where your alignment's going to end up. So you could be off in the curb and off the side of the road by the time you're done there. So definitely you want to identify when there is a negative inventory, if there is a negative inventory, if you're going to be doing something data intensive, like like a condense. Correct that first before running into a condense, because again, you're not going to know where you're going to end up when the dust settles on that data issue.
And that's where using that Troubleshoot Inventory tool in the client data review tools is going to help tremendously, because you want to look for negative inventory not just like, let's say, on the last day of the year, but with that Troubleshoot Inventory tool, you can tell it to show negative inventory at any time during the period. So the inventory may have gone negative during the year, but at year end it's actually positive. Well, you still need to go back and fix that during the year when they had that negative inventory situation. And a lot of times, like Dan said, it'll adjust the cost. A lot of times all you have to do is change the date so the purchase is prior to the sale, and that usually can help fix it. But that Troubleshoot Inventory is great to help find some of those out there.
Yeah, I had a call where the guy kept calling back in and somehow kept getting back to me, where he was trying to do a condense, and they were in a negative inventory throughout a variety of areas of their history that they had, and it was horrible to say it. No other fancy way to put that, but it was just a horrible. Trying to figure out where things went askew, and then putting it back in, and these are closed periods, so then it made it even more challenging to figure out how to correct it. So yeah.
And that's a good point, Dan, is closed periods. And sometimes when we get these clients where inventory is a disaster, we don't necessarily want to go back and fix prior years. So a lot of times what you will want to do is say, okay, what was it at year end? Because they should be doing a physical inventory at year end. What was it at year end? Let's adjust everything to actual and then just focus on this year and fixing it. Sometimes though, I've had situations where, I've told the client, look, it's cost prohibitive to fix all this because you've messed it up so bad. So we're going to adjust everything to actual and actually start a new company and start fresh, and then teach them the proper way to do things and things like that. Because sometimes it's just, like you said, it's a disaster, and it's just, trying to figure it out and then trying to fix it all. I mean, you could spend months on some of this stuff, and it's just like, okay, we got to cut our losses and move forward. So Dan, I got a good techie question here. First of all, somebody wants to know if negative inventory is the same in desktop and QBO.
Yeah, as long as there is a cost associated with the item itself, that there was some kind of cost associated with it, it shouldn't have as huge of an impact. The cost will still be calculated in both QuickBooks Online and desktop. So if that is, I think that's where we're headed there. But the issue is that there isn't a variety, the data issues, corruption and that sort of thing is not a huge impact in online as it is in desktop, because there isn't a lot of, there's no way to fix data issues other than go back and, recalculate and do a value or quantity adjustment, predated. Biggest issue with QuickBooks Online as opposed to desktop is start date. So if you choose the wrong start date, you can't enter transactions that affect inventory prior to that date for that item.
Yep.
So that's that's probably the biggest issue there. But as long as you can enter then the historical transaction and the historical cost, QuickBooks Online is much more forgiving with regards to data issues than desktop.
Yeah, and with QuickBooks Online, it won't let you change that start date, if I remember correctly. Right. You have to make that item inactive and restart over with it.
Yeah, that's a stone tablet.
Yeah.
Can't change that one.
and I will encourage a lot of you, especially if you're converting a client from desktop to online, go out and get the PDF manuals for the advanced certification training on conversions. I can't remember what module it is. It talks about the inventory and setting it up and getting started in QuickBooks Online and things like that. It's invaluable to make sure that you don't run into some problems and issues. So that's something to definitely pay attention to out there. Now, I had another question here I was going to ask you from Karen. You talked about doing that $0 sales receipt. So she says, I found that when I enter a zero cost inventory item, to remove it from inventory, it doesn't clear it from inventory and cost it correctly, particularly on a cash basis. I usually have to have a cost on the item, then use a different item to zero the invoice total and allocate the offset to the P&L. I'm not sure.
Yeah, I'm not. I probably need to see something in action to see if that happens. But if it's zero price, then it should, and there's cost on the item. And so those are the caveats to that.
Right.
As long as there's an average cost or a cost on the item, and this may be something specific to QBO as opposed to desktop. But yeah, as long as there's a cost on the item and it's zero price on the sales receipt, that should put it down to, should calculate it correctly.
Yeah, and I might add too, here is a good example where, we get into situations where like, gosh, why is this not working right? I don't understand this. I don't know how to fix this. I need some help from somebody. This is where, I just want to put the plug in there. If you're not a Pro Advisor yet, join the Pro Advisor program, because the support that comes with it is invaluable. I used to love, I'm going to call and confer with my associate, and I can go call the tech support line, and somebody wonderful like Dan or some of the other care agents, would be able to help me and figure it out and know how to fix it and stuff. And that helped me to learn a lot about QuickBooks over the years. But I do admit now I'm afraid to call him because I feel like it says she should know this.
We wag our finger.
She should know this. Anyway, so if you have a situation where you need help, that's a great opportunity to contact support. Dan, do you want to go ahead and talk about the inventory exchanges?
Yeah. So inventory exchanges. This will happen. Where you, especially in like a retail type of situation where somebody says, well, this was the wrong size and I need to exchange that. And it's very tempting to do it all on one transaction where you put in a negative quantity on the sales transaction. Now, this is also an issue on any type of transaction where you put a negative quantity. And that could be a discount or even anything like that. But it really will bubble up to the surface a lot more with inventory as more of a common practice. But negative amounts on AR transactions when they're in a cash basis, and really that's kind of an oxymoron using invoice, AR transactions on a cash basis. But that QuickBooks will treat it as a payment. So when you have a negative, so that in this case on this screen here, it's a $92 negative amount. So what QuickBooks is going to be doing is it's going to account for that payment across all other items proportionately to that. So on the date of the transaction, whatever that happens to be, in this case is 2017, it's seeing that $92 as a payment, and then it's going to proportionally apply that payment to the other two items, or an even sales tax if that's added on this invoice as well. So the biggest issue is that your reports are going to be skewed based on the date of this invoice, where it's seeing that as a payment as opposed to a return or a negative. So the workaround, or the best thing to do when you're using AR transactions on a cash basis, is to use it as a credit memo for exchanges, and then you apply that on whatever day that you want to apply that, and then you get your reports in a better fashion, as opposed to having it being recognized on the date of the invoice as opposed to the date that you're applying the credit or payment. Were you going to add something there, Michelle, or did you have?
I was busy reading questions, sorry.
Oh.
So here's a question. The cash basis client, when they sell items for $0, when the invoice is paid, QuickBooks does not recognize the item cost, shows as accounts receivable, not cost of goods sold. So in that situation, I wouldn't be using an invoice. You're using a sales receipt. You're doing a $0 sales receipt. And basically what we're doing when we do a $0 transaction, whether it's a $0 sales receipt or a $0 check, you're essentially doing a journal entry. But journal entries don't allow you to use an item on them. So we're using a form like the sales receipt to do a journal entry with the items. Okay, so as you're entering these things on the sales receipt, it's going to do the debits and credits in the background, and it's adjusting those items for you. So that's where when you put that item on the invoice, you can pull it back out of inventory that way. We're going to talk about an inventory adjustment in just a second. You may want to do that as well. But just keep that in mind, as you're not doing it as a $0 invoice. You're doing a $0 sales receipt.
Right.
That's a big difference there. If you have a negative...
The best practice is when you're on a cash basis, use cash transactions. Don't use the invoice or the accrual transaction.
That's a good point. Very good point. And one of the things that's a challenge, though, is, like you said, inventory with a cash basis. A lot of our clients, I would venture to say most of our clients, are not truly cash basis. They're modified cash or modified accrual because they do count inventory. And so it's not truly cash basis because, they may have inventory in stock that they haven't paid for yet. So the accounts payable side technically would not be included on the cash basis. A lot of times they're actually modified cash or modified accrual for tax purposes. So they may be tracking inventory, but not all the other accrual items like the other accounts payable and for expenses and things like that. But when it comes to assets, in some situations, they're actually modified cash or modified accrual. So, and I'm not a tax expert, so go talk to somebody who is.
Right.
But just wanted to put that one out there for you as well.
Yeah. And there's other things too, like on a cash basis, when you have inventory and you have unpaid inventory, then you have that balance in accounts receivable issue on your balance sheet. So there's another caveat to using non-cash transactions in a cash basis where you're in this modified state.
Yes. Okay, let's talk about this one, and then we've got a few more questions that I'd love to cover. Dan, you got the great QuickBooks expertise, so I've got some for you. Okay, another big problem, and we've kind of been talking about some of this, is not adjusting or writing off inventory correctly. I've seen people do a journal entry. Oh, such and such broke, or this was destroyed, or whatever happened, like you can see in that warehouse picture there, things fell off and it's lots of damaged merchandise. Do not use an inventory. Never, ever, ever for inventory, because you can't use the item on there. So you don't have the item, and what happens is then your general ledger balance, you will adjust the general ledger balance with an a journal entry, but then when you run the detail inventory to see the total value of all your inventory items, they're not going to match, and you're going to have a difference. And that's where that Troubleshoot Inventory tool will quickly show you in Desktop if those two numbers agree or not. You'll get like a red or a green on whether that is an agreement or not. If they don't agree, it's got links to help you find those problems, those transactions that usually what happens is they used a journal entry to make an adjustment, or they made a purchase posted directly to the inventory account. So you can run the inventory detail, like if you go into the chart of accounts and you look at the detailed transactions on the inventory, you go into your balance sheet and drill down into the detail. If you see a journal entry directly to the inventory account, that's a problem. If you see a check, a bill, or an expense directly to the inventory account, not using an item, that's going to cause some of those problems. When we want to adjust inventory, there is a feature in QuickBooks Desktop and QuickBooks Online to do an inventory adjustment. So let's say, you have 3 widgets that got damaged. You go in and do an inventory adjustment for those 3 widgets. Instead of doing a $0 transactions to adjust for it, you could go in and do an inventory adjustment. If I pulled 3 items out of inventory for personal use or for use for supplies or whatever, I could do an inventory adjustment for those, posting it to whatever account I wanted to track for that. Somebody added in the Q&A, don't forget use tax on items that are pulled out of inventory for use for the company, like the pool cleaning company, where they pull out some of those supplies that they're going to use instead of selling it as inventory. You could do an inventory adjustment for that. That would avoid some of the problems that some people have said they've had when they're trying to do a $0 transactions using a sales receipt to pull it out and things like that. You could use an inventory adjustment, use that feature instead of doing it that way. Dan, do you have any comments on that?
Yeah, absolutely. The biggest issue that I saw with making adjustments is the line in the sand that the QuickBooks will draw when it comes to especially things like cost. Many times I dealt with people that put in the wrong cost, and it usually had to do with they purchased a case of something and put in the cost of that, but then sold it as an individual item. Yes. Not realizing that the cost was overinflated for an individual one, and weren't necessarily using like the multiple units of measure or different items the way they wanted to have them set up to be able to do that. So they had an overinflated cost, which then showed their gross profit as negative, and now that's even before they take out any of their other expenses, like all that duct tape they use. Yeah. But the cost adjustment or the value adjustment in QuickBooks that you can do draws that line in the sand, and it allows you to say, what is the value of my inventory now, on the date that I'm putting it in there, and then QuickBooks will then recalculate everything else that happened after that. So that is a great way to correct things. You just need to know, and you just need to tell QuickBooks, this is the number that I have on the shelf. This is my value that I'm assigning to it. Yes. And then it will backfill and recalculate everything that happened after that date.
And that's a good point, Dan, too, is how does QuickBooks come up with the cost? And that's where, it's helpful to understand that as these purchases are being entered, that's how it's calculating the average cost or the FIFO cost, depending on desktop or online what you're using. But that's how it's calculating the cost, is based on actual purchases that have been entered. What you put in the item for the cost is a default when it can't get the cost otherwise. So in other words, if you put in that widget A costs $50 when you set that item up for widget A, and you say the cost is $50, but based on your purchases and the transactions that you've entered, like Dan said, maybe you entered it incorrectly, maybe you set the item up to be sold each, but you're purchasing it by the case, it will use the calculated cost based on the transactions that have been entered for the purchases, not the cost that you set up in there as that item. So that's where, understanding that QuickBooks is calculating the cost based on actual transactions. That's where I said if they're not recording purchases correctly, they're not going to have a correct cost. So do you want to add anything?
Everything's connected.
Unfortunately, which is why when they mess something up, it messes up a lot of things when it comes to inventory. Okay, so that is a good point here. Now, question for you. Somebody says if you have negative inventory item, a negative quantity item on an invoice, does it add 1 unit back to inventory?
Yes, absolutely. And that's why it's very tempting to use that negative quantity on a transaction, so that it will put it back into inventory. You know, in the grand scheme of things, you think of an invoice. The opposite of that is a credit memo. Both of those should be positives, but if you do negatives on either of those, they have the negative. You know, they have the opposite effect of what you would do as a positive number. So an invoice, a positive number on an invoice takes it out of inventory. A negative number on an invoice will put it back.
And that's a good point too. If you want to see how a transaction's being posted, like let's say you've entered this sales receipt and you want to see how it's being posted, do a Control-Y if you're in desktop. Control-Y will bring up the journal entry behind the scenes. If you're in QuickBooks Online, you can click down in the middle of that transaction where it says More, Transaction Journal, and go in and see the debits and credits underlying that transaction so you can see what's actually happening. That helps a lot. And thank you. We got Murph on here, William Murphy here. He got an important common mistake, and I should have had this on here and I didn't. When you have an inventory item, let's say you got widgets and it says you have 10 widgets on hand and you make it inactive when there's a balance there, when there are inventory items on hand and you make that inactive, that's going to cause problems because as he's saying, the value is reflected in the inventory valuation reports. When you run the reports, it will still show, like if you run the inventory detail report, you'll see widgets 10 and the amount, but it'll say deleted or inactive, but it's still included in the totals because it's there, but yet then you've got a difference then between the detail and the balance sheet. And if I remember correctly, and you can help me with this as well, Dan, when you make it inactive, it's going to have to write it off, and when it writes that off and adjusts that balance for you, it's writing it off to opening balance equity.
Right.
And so now you've got a problem too because you don't want it going to OBE. So if they take an inventory item that has quantity and value in it and make it inactive or delete it, because you know inactive and delete is kind of the same thing, it will make an adjustment to OBE, opening balance equity. So that is a big no-no. You'll want to do an inventory adjustment prior to writing it off and making it inactive.
Right.
So that's a very good one there. Now, I'm sorry?
That was a good call out from William.
Yes, thank you. Now, the other thing that somebody asked is, I am terrible at inventory. Oh, I love this. Lisa, me too. She says, I'm terrible at inventory myself. Do you all have firms that only set up and implement inventory processes for companies? So I, at a point in my career, decided I hate inventory too. And I think it was after a few nightmare clients and cleanup engagements where I said, oh my God, I hate inventory. I don't ever want to do this again. And so what I do now, when I get a client that has a situation where they're manufacturing or they're a retail company or things like that, yes, I know people who are experts in different types of inventory. Is it an e-commerce client? I know people that are experts there. Is it somebody using fishbowl inventory? Gene Terezevitz is an expert in that area. Is it manufacturing? Is it this? Is it that? So yeah, by going to all these conferences like Scaling New Heights, like QuickBooks Connect, like networking with people in the Facebook group, the QB Power Users Facebook group, you get to know other people and what their expertise is. And so, yes, I would refer a client like, hey, okay, you know, I'll help you with this, that, and the other, but so-and-so is going to help you with the inventory, the setup of this, that, and the other. So you can either refer the client totally to them or just the inventory piece to them, and we actually can network with our peers to meet the needs of the client. So that is a very good point there. You don't have to be an expert in everything. You need to know and have the resources, though. Who can you turn to? So I had another question here. Doggone it, I forgot to launch the negative inventory poll question. So go ahead and answer this, ask this poll question on negative inventory. Have you had this situation with a client with negative inventory? And Dan, do you see any questions that you'd like to answer? Some people are asking about the slide deck. I apologize. I will get that posted to that link after this webinar. And so it will be in the QB Power Hour Handouts 2019 folder. Give me a few minutes after the webinar. I'll get that up there. And I'll go post that link in the Facebook group. So if you're not a member of our Facebook group, QB Power Users on Facebook, if you search for that group, QB Power Users, and ask to join, I'll go through and accept the memberships after this as well. So check some of those out as well.
Yeah, Renee asked if inventory is tracked in Square, does it sync with QBO? And I think to my knowledge, the Sync with Square app will typically handle the income and fees, types of things. So it will come in as an invoice, but the items that are actually shown on the invoice that comes in from Square will just have track the income as opposed to what was actually sold in Square. So it doesn't manage your inventory that way, and then therefore you end up having a lot of guesswork as far as what did you actually sell, and then you'll have to make those quantity adjustments to actually get that quantity in alignment. Someone else asked, what's the best POS system to use with QBO? QuickBooks Point of Sale, the desktop application, can be configured to use with to synchronize to QBO through a third party called Ability. So if they're open to that, but if they are looking for a more of a tablet-based point of sale, there's AccuPause and Lightspeed is some of the apps that I've heard people have really good success with regards to having a POS system that's a little bit more mobile friendly, like a tablet-based type of point of sale system.
Very good. Okay, I went ahead and shared the results of the last poll. Here's another quick poll question. Did you learn something new today? And I certainly hope so. Kay says, Accounting Business Solutions by JCS specializes in inventory. So that's something that's helpful there. So you might check out some of these things. Somebody says, once an inventory item is inactive, it will not appear on the inventory summary for prior periods, such as year end. Is there an easy way to find these inactive items that had a balance as of the prior report date? Deborah, go into, first of all, you can tell it to show and include inactive items if you customize the report. You can tell it to include inactive ones. Also, if you go to opening balance equity and click on the opening balance equity balance to get into the detail, you can go in there and see the detail and see what happened and where those balances come from, so you can see what caused that. So yes, you can drill down to find those things out there. All right, Dan, do you have any other comments? I'm glad to see 93% of you all did learn something new today, so that is awesome.
Yay.
Now, Dan, I'm going to let you see if you'd like to share a comment on here. I saw a couple of people who said, the support isn't that great, that I get, directed here or there. First of all, I would like to add, once you get certified, you get the regular intro level support. Once you get advanced certified, you get diamond level support, like Dan used to be diamond level support, and it's a higher tier. But the support overall, in my opinion, is amazing. Now, there are certain times of the year, busy season and stuff, where yes, you're going to have to wait. I mean, that's only natural. But when you consider that you have a person who's trained in accounting, who knows QuickBooks usually inside and out. Yes, you might get someone who's relatively new, but you've got people and they've got resources and tools and knowledge base articles that they can help us. I mean, when you consider the cost of that free support, I think it's amazing. I think some of us need a little more patience. Can they do better sometimes? Yes, occasionally you're going to get someone who's relatively new. Be patient. Do you remember when you were new trying to do your first bank rec or trying to fix your first inventory mistake? Give people some slack. But overall, I think support is an amazing benefit that Intuit provides for us. Dan, do you want to say anything about that?
Yeah, I mean, definitely, it is going through a, a rebirth and renaissance, I guess would be a good way to describe it. I remember that there was a lot, there was a certain segment that would almost quiz your competency before even asking your question. How long have you been there? Are you good with this? That sort of thing. So, and oftentimes, that mindset would come along with, the first person to answer the phone. Typically, when you call a call center or customer service, the first person is kind of like a triage, type of person. But because of the tiered structure, in theory, you should have, if you're on a higher tier, you should be getting, the higher trained or competent, support. But there is so much to know, with regards to what QuickBooks will do, and depending on someone's experience, from where they came from, they may be, learning something new, and be stretched. And, that is, that's a common thing. And, and so they have so many resources. It's just, the timing of things is certainly can be, your stress can equate to their stress and vice versa.
Very good. And one thing I would like to clarify out here, and thank you, I can't remember who reminded me of that, the new point structure. Just getting advanced certified doesn't make you elite, but it certainly helps to get you there to that elite status where you have the higher level of support. So it certainly helps get you there, but it's not automatic.
Right.
And then somebody else said diamond level is great. I'm 6 years in as an advanced pro advisor, get advanced certified. So that is just great. And somebody says, Michelle, can we hear your thoughts on live bookkeeping? Absolutely, that's coming soon. There's not enough time today to cover that, and I am definitely going to be speaking out on that. I know I've been quiet about it for a while, but I will be speaking out about that. So if you haven't subscribed to my blog, subscribe to my blog, long4success.com/blog, as well as stay subscribed to QB Power Hour in the Facebook group, and I'll be posting what I'm doing and talking about it and things like that. I definitely want to do something where there's the Q&A opportunity for you all to express your comments and questions and stuff. I know the town hall the other day didn't adequately address everybody's questions and concerns, so I will be doing something on that coming up. So stay tuned for that. And I know Dan's got something to get on to, so thank you for staying a little bit late with us. And everybody, if you join us in the QB Power Users community on the Facebook group, I'll make sure that I get the link posted for those slides. So in a little while, the slides will be updated to that link. I'll also get these recordings uploaded this afternoon as well on my YouTube channel, Michelle Long CPA, Michelle Long CPA. So thank you so much, Dan, and thank you everybody for joining us for another QB Power Hour. I hope you all have a great day, and I'll see you soon.
Bye-bye.
Bye, everyone.